Welcome to the Deep Dive. We take stacks of information, cut through all the noise, and really distill it down to what matters for you.
That's the goal.
Today, we are plunging into the latest from Kroger Co., one of America's, biggest grocers. We've got their Q2 2025 earnings call, the supplemental materials.
A lot to get through.
Exactly. And our mission here is to go beyond just the surface level numbers and the jargon. We want to help you really understand what's driving their business.
And how they're navigating, a really competitive retail landscape.
Right. And what all these strategic shifts mean for you, the consumer, and the broader market as well.
Yeah, and we'll be exploring the moves Kroger's making, both tactical and strategic. Things like internal restructuring, big cost optimization efforts, and how they're adapting to shoppers' demands, which honestly seem to be changing all the time, especially across different income levels.
It's fascinating, isn't it, how a huge company like Kroger with so much tradition
Deep roots.
balances that legacy with some pretty aggressive modernization, especially in a sector like groceries that, it touches everyone's daily life.
Often in quite personal ways, yeah.
Okay, so let's dive in. Let's unpack this with some of the headline numbers that really caught our attention. Kroger just reported a strong Q2 for 2025.
Strong is right.
First off, identical sales without fuel. They grew 3.4%. Now, for anyone less familiar, this identical sales without fuel, it's a really key metric for us.
Super important.
It compares sales at the same stores year over year, but it strips out the wild swings in gas prices. So it gives you a pure read on their core grocery business.
And 3.4%, that beat expectations. It's also their sixth quarter in a row showing improvement. That's momentum.
Definitely. Then there's adjusted EPS earnings per share. That hit $1.04. That's a solid 12% growth compared to last year.
And adjusted there, just quickly, and means they've taken out some one-off items, right, to give a clearer view of ongoing operational profit per share.
Exactly. Makes it easier to compare apples to apples. And total company sales. Huge. $33.9 billion.
Billion, with a B.
And Ron Sargent, Kroger's chairman and CEO, he pointed to three main priorities driving this success.
Yeah, he laid them out pretty clearly.
Simplifying the organization, improving the customer experience, and focusing on value-creating work.
And I think the key takeaway here is that these numbers, they aren't just figures floating in space. They're actual proof points for those strategies he mentioned.
Right. They connect directly.
That sales growth, especially the identical sales, it really suggests their focus on the customers. Well, it's working. It's resonating.
But it's more than just hitting targets, isn't it? It feels like maybe they're showing a better grasp of their customer in this kind of volatile market.
I think so. Getting 3.4% identical growth now in this super competitive grocery world, it suggests they're not just, floating along. They might actually be winning market share.
Which is much harder than just growing with the overall market.
Much harder. And importantly, this growth is coming from specific spots. Pharmacy, e-commerce, fresh food categories, shows they're targeting where people are spending.
So smart targeting.
And underpinning all that is the focus on simplifying things internally and creating value. That's building the financial strength we're seeing.
Okay, let's dive into that second priority, improving the customer experience. Kroger seems to be making some pretty big strides in how customers see their value proposition.
They are. They've put serious investment into pricing, lowered prices on, over 3,500 more products?
Yeah, 3,500. And that's not just random discounting. They say it's improving their price gaps compared to major competitors.
And apparently it's boosting how customers perceive their prices in almost every division. That's a big deal.
And they're simplifying promotions, too. Cutting back on those really complex offers. Is this like getting rid of the buy one, get one if you buy 4 other things on a Tuesday with a loyalty card?
Huh. Exactly like that. They seem to realize that super complex deals can actually, turn customers off. People feel like they need a PhD in couponing.
Yeah, it can be frustrating.
So simplifying means clear, easy to understand savings. Builds trust, not confusion. And then there's this move that really caught my eye. They actually brought back paper coupons in every single store to make savings accessible to non-digital customers.
Wow. Okay, paper coupons. That feels traditional in our super digital world. What's the thinking there? Seems a bit backward, maybe.
Well, it might seem that way, but I think it's actually quite shrewd. It's not just about, helping out a small group.
Okay.
Think about the psychology. Everything pushes digital, digital, digital. Reintroducing paper coupons gives this, tangible sense of value. instant gratification almost.
Something you can actually hold.
Exactly. Something digital apps maybe don't quite replicate for everyone. It's a bridge, perhaps, to loyalty for customers who felt maybe a bit left behind by tech.
So it sends a signal.
Hmm.
We value all our customers, not just the ones with smartphones.
Precisely. Could be a real differentiator for their brand image and loyalty.
And speaking of differentiating, their own brands, our brands, they call them, like Simple Truth for organic or Private Selection for premium stuff.
Yeah, those are huge for them.
They continue to outperform the national brands in sales growth. So this all connects back to making your shopping trip better, whether you're after a bargain or something fancy, and making sure everyone feels included.
And this whole strategy ties directly into what Kroger calls a tale of two cities among consumers right now.
Tale of two cities. How so?
Well, on one side, you have low and middle-income households. They're really hunting for deals, using more coupons, digital and paper now.
Makes sense.
Making smaller, maybe more frequent shopping trips, buying more of those private label our brands, and they're eating out less, so more meals at home.
Okay, that's one city. What's the other?
The other side is higher income households. They're also concerned about value, sure, but they're still spending, maybe splurging a bit on premium items.
Like the Private Selection stuff.
Exactly. Or buying bigger pack sizes because the value per serving is better. So our brands, especially the ones that feel a bit more premium or healthy, like you see with fresh ingredients, the avocado, the lime, the nice squash.
Right.
That strategy caters perfectly to both ends of this spectrum. It helps Kroger capture spending across the board and stand out.
So while they're focused on winning you over at the checkout, they're also doing some serious heavy lifting behind the scenes organizationally.
Oh, absolutely.
Let's talk about that internal restructuring. They started closing about 60 unprofitable stores.
Yeah, tough but necessary decisions.
And they cut their corporate administrative team by almost 1,000 people. Plus, they're reviewing all their non-core assets, figuring out if they still make sense. And legally, they settled that issue with C&S wholesale grocers, put it behind them, as they said.
Right. And if you connect those dots back to the big picture, those tough calls are all about that first priority. Simplifying the organization and cost optimization, obviously.
It's not just cutting costs randomly, though.
No. It's about freeing up capital, generating the funds they need for those other big investments, like the price cuts we talked about, or investing in new technology.
Got it. Finding the money to reinvest.
Exactly. The CFO, David Kennerly, he specifically mentioned big opportunities in sourcing. That's both the cost of the products they sell and the stuff they buy that's not for resale.
Like store supplies, fixtures.
Right. Office supplies, cleaning stuff, all that. And he also talked about modernizing work across the whole company. It's about finding the, quote, fuel to compete and reinvest for the long haul.
And modernizing work, that's not just jargon, is it? It means real changes.
Definitely. Streamlining how things get done internally, maybe new software, rethinking store layouts for efficiency, and using data and AI much more effectively.
Okay, perfect segue. Let's talk about artificial intelligence. How is Kroger using AI to drive these changes?
Well, they see AI as a natural next step, but also, honestly, a really powerful one for them, especially given the sheer amount of data they have.
63 million households, they said.
63 million. That's not just big data. That's like an unparalleled competitive advantage. A moat, really.
And they have their 84.51 data science division to crunch all that.
Right. And 84.51 isn't just about making things a bit more efficient. It lets them predict demand, personalize offers for you, optimize inventory. With a precision few competitors, if any, can really match.
So, less natural evolution, more like a strategic weapon.
I'd say so, yeah. It could genuinely reshape their supply chain, their pricing power. And they gave concrete examples of where AI is already working.
Like what?
More competitive pricing based on AI analysis, big improvements in shrink that's reducing waste on unsold products.
Always a challenge in grocery.
Huge challenge. Better inventory management means better sell-through in stores. AI is also helping speed up fulfillment, enabling that 2-hour pickup option for customers.
And looking ahead.
Even more uses. Optimizing staff schedules, department by department, hour by hour. Improving planogramming. That's the science of where products go on shelves.
The layout.
Exactly. Maximizing sales through placement. And, of course, enhancing customer personalization even further. It's all about operational excellence, turning that mountain of data into smart, actionable steps.
Okay, let's shift to e-commerce. Still a massive growth area for them. 16% sales growth in Q2. Strong number.
Very strong.
And interestingly, for the first time, delivery sales actually overtook store pickup sales. That feels like a big shift in how people are ordering online.
It really does. And that shift prompted them to do a thorough strategic review last quarter. So what's the new game plan there? Especially around fulfilling those online orders.
Yeah, what's the thinking now?
Well, the review seems to have two main goals, really tying into this changing landscape. First, improve the customer experience by using their actual stores more for faster delivery.
Using the stores themselves.
Yeah. Fulfill online orders right from the store shelves. The inventory is already close to the customer, right?
Yeah.
So it cuts down on those expensive last-mile delivery costs. They called it an asset-light delivery possibility. It lets them expand rapid delivery under 2 hours from, 97% of their stores without needing huge new capital investments. It's basically leveraging the network they already have.
So that means, for you, the listener, potentially even faster deliveries to your door. And it might cost Kroger less because they're using the stores you already shop in. Smart way to fight pure play online, guys.
Exactly right. And the second objective links directly to that. Improve profitability and cut the cost to serve for e-commerce.
How are they doing that?
They're looking closely at their automated fulfillment network, those big warehouse sites, analyzing them one by one. They're finding the ones in really high-density areas work much better or more profitable.
So focus on those.
Yeah, optimize the successful ones for profit, keep the customer experience high, but maybe scale back or rethink the ones that aren't performing as well.
Makes sense. Now, beyond just selling groceries online, this digital push fuels other parts of the business too, doesn't it?
Absolutely. All this online activity, this digital momentum, feeds right into their retail media business.
Selling ad space on their website and app.
Precisely. That had a strong quarter, and it's a key profit driver. Now, granted, that space is getting super crowded.
Amazon, Walmart, everyone's doing it.
Everyone. Kroger believes their deep customer data gives them unique advantages for advertisers. But they admit they're refining their model to make sure their platform really stands out. It's a smart move, but they need to keep innovating to keep that edge.
Okay, let's swing back to the overall financial picture. Strong Q2 results led them to update their guidance for the full year 2025.
Yeah, they raised expectations.
Identical sales without fuel guidance lifted to 2.7% to 3.4% growth for the year. Adjusted FIFO operating profit also raised, now expected between $4.8 billion and $4.9 billion. And just a reminder, FIFO is first in, first out accounting, and operating profit is what's left after operating costs.
Crucial number there.
And adjusted EPS guidance also up to between $4.70 and $4.80 per share. So clearly, they're managing to balance these big investments with keeping margins stable.
Yeah, they expect their FIFO gross margin rate, excluding some items, to be pretty flat for the whole year.
Which is impressive given the price cuts.
It really is. It shows how carefully they're managing these trade-offs. They're committed to being, as they put it, margin neutral while making those price investments. That takes discipline.
Are there headwinds, though? Things working against them?
Oh, sure. They mentioned tougher comparisons coming up in the second half of the year, and that mix effect from pharmacy growing so fast.
Right. Pharmacy brings in good profit dollars, but the margin rate is lower than groceries.
Exactly. So it pulls the overall margin rate down a bit, even though the core grocery margins are healthy. They also mentioned a LIFO charge of $62 million for the quarter. It's last in, first out. It's another inventory accounting method. That charge basically means their newest inventory costs more than older stuff, reflecting inflation. So yeah, strong results, but they're definitely navigating a tricky economic climate. They have their battle scars.
Okay, final piece. Shareholder returns. What's Kroger doing for its investors?
Their approach here seems really consistent, very well defined. 4 main priorities.
Right.
First, invest in the business for long-term growth, like 30 major store projects this year, and they expect a 30% increase in store openings next year. In 2026.
Wow, still investing heavily in physical stores.
Seems so. Second, keep an investment-grade debt rating. Their key debt ratio is actually below their target range right now, which gives them a lot of financial flexibility.
Good position to be in.
Very. Third, grow the dividend. They just raised it 9% in Q2. That's the 19th year in a row they've increased it.
19 years. That's a strong signal of confidence.
Huge signal. And fourth, return extra cash to shareholders by buying back stock. They have a big $5 billion accelerated share repurchase ASR program finishing up soon.
ASR just means they buy back shares quickly, right?
Essentially, yes. So the overall goal driving all this, deliver a total shareholder return that's stock appreciation plus dividends of 8% to 11% over time.
Okay, so wrapping this up, we've taken a deep dive into Kroger's Q2 2025. It paints a picture of a company making some really decisive moves, simplifying, innovating, trying to connect with customers in different ways.
Yeah, from bringing back paper coupons, which feels old school,
Right.
to using sophisticated AI for efficiency, and then rethinking e-commerce fulfillment by really leaning into that massive store network they have.
They're definitely adapting, using both traditional tools and cutting-edge tech to navigate a market that's, well, dynamic and pretty demanding.
Absolutely. And that focus on balancing the aggressive price investments with really tight cost control, plus that disciplined plan for capital allocation, it suggests a company focused on sustainable growth and delivering value back to shareholders, even when things are tough.
It really shows the kind of agility and maybe strategic foresight needed even from the giants to thrive, not just, survive.
Well said.
So this brings us to a final thought, something for you to ponder. As Kroger keeps pushing on speed, personalization, and using its huge store network for online orders, what does the grocery shopping experience actually look like, say, 5 years from now?
Interesting question.
Will that traditional store still be the main hub? Maybe it becomes more of a hybrid place, part shopping center, part rapid delivery depot, or does it morph into something totally new, driven by all these innovations and the, frankly, endless possibilities of AI?
A lot to think about there.
Definitely something to consider. Thanks for joining us for this deep dive.